Hello friends, welcome to Travel Along with us. Today, one of the most whispering topic is price of a gold. So, price of a gold hit at the peak. So, everybody in dream they are planning to purchase the gold. Likewise, I got a dream which is very different. I was sleeping on the gold. So, do anybody got the same? If so, please comment below. You are looking at one of the most incredible market stories of the decade? Yes, gold. It has shattered every record, currently trading at levels few predicted. But is this a rally, a bubble waiting to burst, or it is the start of a multi-year super cycle that could push the price up to $5,000 an ounce or even higher? Today, we are not just looking at the price, we are analyzing the forces behind it. I am breaking down three massive long term drivers and two immediate threats that could lead to a sudden drop. This is your essential gold forecast for the next 12 to 18 months. Let us dive straight into three fundamental reasons why the biggest financial institution in the world are currently overwhelming bullish on gold. Number 1, perhaps the most powerful, central bank demand. Banks in countries like China, India, and Turkey are buying gold at a near historic rate. Last year alone, they added thousands of tons to their reserves. This isn't speculation, it is structural shift, a move to diversify away from reliance on the US dollars amidst global trade and political friction. This demand creates a continuous high floor under the price that simply didn't exist in previous rallies. Do you agree this? And then comes second factor. It is the risk premium. Look around. We have persistent conflicts, trade wars, and escalating political tensions. Gold is the world's oldest and most trusted safe haven asset. When the world is unstable, investors pay a premium for that safety. This fear factor premium is baked into a current price, and as long as global uncertainty remains high, this driver will keep the price elevated. It acts like emotional magnet for capital. Finally, the Federal Reserve's next move. Gold is non-yielding asset, so it shines when the real interest rates are low or falling. The market is fully pricing in the cycle of rate cuts over the next year as major economies cool down. Lower interest rate means lower opportunity cost for holding gold. When you can't get high return on a bank deposit or short term bond, gold looks most attractive. This dynamic is powerful historical catalyst for a sustained gold run. These are all the three factors. So, next, from the technical perspective, all time highs are bullish. The breakout past previous resistance levels confirms the strength and the trend. Currently, the price is consolidating, which is a sign of healthy price action, not a crash. The analysts at major banks have set some compelling targets based on this momentum. For the end of 2025, the consensus target range sits comfortably between $4,400 to $4,600 per ounce. So, looking into 2026, some of the most respected commodity desks are projecting price points not worth of rupees $5,000. So the psychology of breaking a major milestone is like the $4,000 often clears the path for the next $1,000 increment. Let this be balanced. No asset goes up in a straight line. There are two major risks that could trigger a sudden sharp correction of 10% or more. The first sudden de escalation of a major global conflict or geopolitical hotspot. If tension is the fear money that rushed into a gold will rush out just as fast, leading to profit taking and a price drop. This is a short term sentiment driven risk. The second is hawkish Fed surprise. If inflation reaccelerates, forcing the Fed to delay or even halt its rate cut plans. Bond yields would surge higher. A strong rising US dollar and higher real estate would make gold significantly less appealing, directly pressurizing its price. Keep a very close eye on upcoming US inflation and employment data. So inflation in US is the major cause. So to answer the question, will gold price increase or decrease? Our analysis suggests the long-term trend is firmly up driven by structural central bank demand and the upcoming rate cut cycle. However, investors should mentally be prepared for potential short-term volatility based on geopolitical news or Fed policy changes. If you are looking to invest, remember the option physical gold, gold ETF, or sovereign bonds. If you want that extra interest income, always treat gold as a portfolio diversifier and a long term hedge, not to get a rich quick scheme. Do you do your own research and consult a financial advisor? I want to hear from you. What is your gold price target for the end of 2025? Let me know in comments below. If you found this analysis valuable, please hit that like button, subscribe for more deep dive market insights, and I'll catch you in the next video.